Hi, this is Richard Flax at Moneyfarm with a regular market update. There are a few topics to focus on as we head into the end of the year. We saw a recovery in markets over the past few weeks. We think that's been largely driven by optimism about inflation and the possibility that it's peaked, at least in the Eurozone and the US. That means that central banks probably won't need to hike rates by more than is currently expected. With that in mind, financial analysis has shifted a bit. The focus now is more on growth for next year and the prospects of a recession. Recently, though, we've seen stronger than expected macro data out of the US in terms of both wage growth and job creation. And in the curious logic of financial markets, that good economic news has been taken as bad news for financial assets, raising the possibility that central banks will in fact need to keep interest rates a bit higher for a bit longer. All that could create some short-term weakness, but overall, we think that economic activity will continue to slow over the coming months. And if we do see a recession in the US and Europe, it should prove to be relatively shallow. The situation in the UK looks a bit more challenging. We look set for a difficult few months, with high inflation, industrial action, and slowing growth all set to take their toll. It's worth keeping in mind, though, that in a difficult year for financial assets, UK large cap equities have held up relatively well, thanks to their global earnings stream and a relatively weak currency. Small cap UK stocks, which are a bit more exposed to the domestic economy, have struggled. But we shouldn't necessarily extrapolate that a weak UK economy is bad for all UK equities. In China, the government has been lifting COVID restrictions over the past few weeks. The impact here will be interesting to monitor. On one hand, we could see a surge in cases. Vaccination rates, particularly among older people, aren't especially high, and China doesn't have a lot of intensive care capacity. On the other hand, if the opening is restrained, we could see an acceleration in economic activity, and that could provide a welcome boost for global growth. We think that'll probably matter more for financial markets over the coming months. Finally, we're updating our long-term expected return assumptions, as we do at the end of every year. We'll talk more about these in the next few weeks, but after a difficult 2022, those 10-year forecasts are higher than they have been for some time. With that in mind, I just want to say thank you for watching, have a peaceful holiday season, and all the best for 2023.